India's FMCG sector has quietly reshaped itself in FY25. While rural markets slowed, urban demand surged. While some categories shrank, others like health foods and D2C exploded. Global inflation, local innovation, regulatory changes, and tech adoption all collided to redefine the competitive landscape. Welcome to India Business Insights. In this deep dive video, we decode the FY25 financials, strategy pivots, and future outlook of India's top FMCG players. From HUL to ITC, Marico to Dabur, and the rising wave of D2C challengers. This is not just a quarterly update, this is a strategic lens into the evolution of everyday consumption in India. Introduction to the Indian FMCG industry. The fast-moving consumer goods FMCG industry in India represents the fourth largest sector in the economy, encompassing consumer packaged goods with high turnover, including food and beverages 19%, household and personal care 50%, and healthcare 31%. In FY25, the Indian FMCG market was valued at USD 211 billion, continuing its impressive growth trajectory from USD 31.6 billion in 2011 and projected to reach USD 1,108.48 billion by 2033 at a CAGR of 17.33%. The industry's robust expansion is fueled by several key factors. India's young demographic profile, median age 27, rising disposable incomes, and government initiatives like the Production Linked Incentive PLI scheme with a USD 1.42 billion outlay specifically for the sector. Urban markets contribute 55 to 65% of revenue, while rural markets 35 to 45% are demonstrating faster growth due to increased rural incomes and brand awareness. Key industry metrics. Market size FY25 USD 211 billion, projected CAGR 2025 to 2033 17.33%, employment generation 3+ million direct jobs, urban market share 55 to 65%, rural market share 35 to 45%. Domestic market performance. During FY25, the FMCG market witnessed subdued demand trends, with consumer sentiment remaining largely stable but under pressure from various headwinds. The growth trajectory reflected mixed trends across mass and affluent urban segments, with easing retail and food inflation providing some encouragement for future consumption patterns. Urban versus rural dynamics. Rural demand showed gradual improvement throughout FY25, supported by healthy monsoon seasons, higher minimum support prices, and continued government spending on rural development initiatives. However, rural consumption still remains 7 to 10% below pre-COVID highs on a per capita basis. Urban demand, particularly in mass segments, moderated throughout the year, though premium categories continue to demonstrate resilience, especially in metro and tier 1 cities. The spending pattern across categories revealed important insights about consumption priorities. In food and beverages, rural India contributed a significant 40% share, reflecting the essential nature of these products. Personal care showed strong urban concentration at 65%, with home care had the highest rural penetration among discretionary categories at 45%. Healthcare remained predominantly urban focused with 70% share, indicating both higher awareness and greater purchasing power in urban centers. Channel performance. While syndicated data primarily covered general and modern trade channels, incorporating e-commerce data revealed that urban demand continued to face challenges throughout the year. Traditional retail still dominated with approximately 80% market shares, though e-commerce and quick commerce grew rapidly, reaching nearly 15% of the total FMCG sales in urban areas. Modern trade, supermarkets, and hypermarkets accounted for approximately 5% of the overall distribution. Competitor landscape. Commentary from unlisted players, including Indian subsidiaries of multinational corporations, D2C players, and regional brands, indicated slightly better performance than listed giants, underscoring broader demand resilience despite the overall subdued environment. This suggested that nimble, focused players were potentially capturing specific consumer segments more effectively than more diversified conglomerates. Economic and commodity factors. Macroeconomic context. The FMCG sector's performance in FY25 was framed within a broader economic context characterized by moderate growth and easing inflation. India's real GDP grew at approximately 6.9% in FY25, led primarily by services and manufacturing sectors. Consumer Price Index (CPI) inflation fell to an average of around 5%, improving consumer sentiment and purchasing power. GST collections touched record highs during the fiscal year, indicating strong formalization of the economy and relatively robust consumption patterns despite headwinds. Commodity inflation and input cost pressures. The FMCG sector faced significant inflationary pressures across various commodity categories during FY25. These pressures directly impacted product costs and margin structures across the industry, requiring companies to implement strategic responses to maintain profitability. Financial performance analysis Q4 FY25 performance highlights. The fourth quarter performance across major FMCG companies reflected the challenging operating environment with mixed results. Nestle India reported a 5.2% year-on-year decline in net profit to Rs 885 crore, despite achieving volume growth and a 4.5% increase in net sales to Rs 5,503.9 crore. The company's domestic sales crossed the Rs 5,235 crore mark, representing the highest ever quarterly achievement. HUL delivered a 3% underlying sales growth driven by 2% underlying volume growth, though gross margins compressed to 49.8%, down 160 basis points year-on-year due to unpriced commodity inflation. EBITDA margins stood at 23.1%, down 30 basis points year-over-year, while PAT growth remained modest at 4%. Marico demonstrated strong performance with revenue from operations reaching Rs 2,730 crore, up 20% year-over-year, supported by underlying volume growth of 7% in the India business and constant currency growth of 16% in international operations. Dabur consolidated revenue grew by 2.1% in constant currency terms and 0.6% in INR terms, with international business recording strong growth of 19.3% in constant currency, while the India business declined by approximately 3.4%, reflecting consumption softness. ITC reported exceptional results with net profit of Rs 19,561.57 crore for Q4 FY25, marking a 247% year-over-year increase, primarily due to a one-time exceptional gain of Rs 15,163.6 crore from the sale of its hotel business. Britannia achieved a turnover of INR 4,376 crores with 9% growth on a 12-month basis and 12.4% growth on a 2-year basis. Full year FY25 performance. The full year performance across the sector showed resilient growth despite challenging conditions. Segment-wise analysis. Food and beverages. The food and beverages category, comprising 19% of the FMCG market, showed mixed performance across subcategories. Nestlé's powdered and liquid beverages emerged as the largest growth contributor in FY25, registering high double-digit growth, while confectionery grew at a high single-digit pace both in value and volume, driven primarily by Kit Kat performance. The prepared dishes and cooking aids segment posted mid-single-digit growth, with Maggi returning to volume growth. Personal care and home care. Personal care, the largest segment accounting for 50% of the FMCG market, demonstrated resilience despite pricing pressures. HUL's beauty and well-being achieved 3% underlying sales growth, with hair care growing in double digits and high single-digit underlying volume growth. Healthcare. Healthcare, representing 31% of the FMCG market, emerged as one of the most promising growth segments in FY25. Companies increased their focus on health and wellness products in response to heightened consumer awareness post-pandemic. Dabur's healthcare portfolio showed consistent performance with its Hajmola franchise receiving positive consumer response to innovations, with extensions and variants now contributing more than 50% of franchise revenue. Distribution and supply chain transformation. Distribution channel evolution. Distribution expansion and supply chain optimization emerged as key strategic priorities across the sector in FY25. Companies invested heavily in expanding their reach while simultaneously modernizing their supply chain infrastructure to improve efficiency and resilience against disruptions. Channel mix transformation. The FMCG distribution landscape underwent significant transformation in FY25, with modern trade and e-commerce channels achieving double-digit growth, now representing 8 to 10% of sales for major companies. Traditional retail remained dominant but faced growth challenges in urban areas as digital channels captured incremental demand, particularly among younger, more affluent consumers. Supply chain innovation. Supply chain innovation focused on digitization, automation, and lean model implementation. HUL's Doma factory was recognized as an end-to-end value chain lighthouse by the World Economic Forum, showcasing advanced manufacturing technologies and processes. Marico's Pondicherry plant received gold at OHSSAI's HSE Excellence and ESG Global Awards 2024, demonstrating operational excellence and innovation capabilities supporting long-term competitive advantages. Companies invested in advanced demand forecasting systems using artificial intelligence to optimize inventory levels and reduce wastage. Direct-to-retail models gained prominence, particularly for premium products in urban centers, enabling fast product cycles and reduced distribution costs. Digital acceleration and e-commerce. E-commerce growth. E-commerce emerged as a critical growth driver for the FMCG sector in FY25, with the channel's contribution reaching 15% of total sales in urban markets. The online grocery market in India is projected to reach USD 76.76 billion by 2032, growing at a CAGR of 32.7%. This explosive growth was fueled by increased smartphone penetration, improved logistics infrastructure, and changing consumer preferences accelerated by the pandemic. Major e-commerce players in the FMCG space included horizontal marketplaces like Amazon and Flipkart, specialized grocery platforms like Big Basket and Blinkit, and direct-to-consumer websites operated by FMCG companies themselves. The rapid rise of quick commerce platforms offering delivery in under 30 minutes created a new competitive dynamic, particularly for impulse purchase categories and emergency replenishment occasions. Digital-first brands and D2C models. Digital-first brands continue to disrupt traditional FMCG categories with companies like Mamaearth, The Moms Co, Wow Skin Science, and Plix capturing significant market share in their respective niches. These brands leveraged social media for marketing, collected rich first-party consumer data, and maintained direct relationships with their customers. AI and digital transformation. Artificial intelligence and machine learning technologies increasingly found applications across the FMCG value chain in FY25. Unilever utilized AI for supply chain optimization and demand forecasting, while Nestle developed an AI platform to validate new product ideas before launch. These technologies enabled more personalized marketing, optimized pricing strategies, and improved operational efficiencies. Marketing strategies and consumer trends. Marketing investment patterns. Digital transformation in marketing emerged as a critical competitive advantage across the sector. HUL strategically pivoted media spends towards digital platforms, achieving over 50% digital media spends with elevated media investments, including onboarding major celebrities as brand ambassadors and extensive digital advertising during IPL. The Glow & Lovely relaunch demonstrated modern marketing approaches with social-first initiatives, achieving higher reach and marked improvement in digital awareness. Pricing and packaging strategies. Pricing strategies across the sector were primarily driven by net material inflation management and consumer affordability considerations. HUL's pricing actions were guided by net material inflation remaining flat for full year 2025, with underlying price growth Net zero, as inflation in some business parts was offset by buying efficiency and savings. The company implemented price pack architecture adjustments to incentivize consumption, reducing price gaps between sachets and large packs to accelerate consumer pack upgradation. Export dynamics. The production linked incentive PLI scheme with a USD 1.42 billion outlay boosted exports by reducing production costs for Indian manufacturers. The food processing PLI allocation of Rs 10,900 crore specifically enhanced export capabilities for processed and packaged food products. Companies including Patanjali, Amul, and Tata Consumer expanded their export footprint, particularly targeting Middle East, Africa, and Southeast Asian markets. ESG and sustainability initiatives. Sustainability focus areas. Environmental, social, and governance (ESG) considerations became increasingly central to FMCG companies' strategies in FY25, driven by regulatory pressures, investor expectations, and evolving consumer preferences. Key sustainability initiatives focused on three primary areas. Packaging innovation. A significant shift towards recyclable, biodegradable, and lightweight materials was evident across the sector. Colgate introduced recyclable toothpaste tubes, while Unilever launched products with 95% natural ingredients and environmentally friendly packaging. Material reduction initiatives aimed at minimizing plastic usage gained momentum, with companies adopting concentrated formulations requiring smaller packaging. Carbon reduction commitments. Several major FMCG companies announced or accelerated their carbon reduction commitments during FY25. These typically included targets for achieving carbon neutrality across operations, Scope 1 and 2 emissions by 2030 to 2035, with more ambitious companies exceeding these commitments to include supply chain emissions, Scope 3 by 2040 to 2050. Beyond carbon, biodiversity preservation emerged as a focus area, particularly for companies relying on agricultural inputs. Sustainable farming practices, reduced chemical usage, and habitat preservation initiatives formed part of these broader environmental commitments. Future outlook. Market projections. The Indian FMCG market is projected to reach USD 1,108.48 billion by 2033, exacerbating a CAGR of 17.33% from 2025 to 2033. This growth will be driven by several structural factors: rising disposable incomes, continued urbanization, rural consumption recovery, and the expansion of modern retail and e-commerce infrastructure. Near-term growth for FY26 is forecasted at 7 to 9% by CRISIL, with volume growth expected to outpace price growth as inflation moderates. Emerging opportunities. Health and nutrition. Growing consumer health consciousness creates opportunities for fortified products, functional foods, and preventive healthcare offerings. Plant-based proteins, gut health solutions, and immunity boosters represent particularly promising segments. Premiumization. The expanding middle class and affluent segments provide opportunities for premium and super premium offerings across categories, particularly in urban centers and through digital channels. Rural development. The gradual recovery of rural demand presents significant volume growth potential, especially through tailored product offerings and innovative distribution models reaching previously underserved markets. Conclusion. The Indian FMCG industry in FY25 demonstrated resilience amid challenging macroeconomic conditions, with companies navigating commodity inflation, uneven demand patterns, and channel disruptions through strategic pricing, innovation, and operational excellence. The sector's performance reflected the broader economic context of modern growth and gradual recovery, with premium segments and digital channels outperforming traditional categories and sales channels. Final perspective. As the FMCG sector evolves, the traditional playbook is giving way to more nuanced, data-driven, and consumer-centric approaches. The winners will be those who combine the scale advantages of established players with the agility, digital savvy, and consumer intimacy of emerging disruptors, creating organizational capable of sustained relevance and growth in a rapidly changing environment. The Indian FMCG sector is no longer just about soaps, shampoos, and biscuits. It's about analytics led personalization, digital commerce, conscious consumption, and global ambition. The battle is as much for self space as it is for screen time and delivery timelines. If this video helped you understand the shifts in India's consumption story, do like, share, and subscribe to India Business Insights. We bring you strategic, data driven commentary on Indian business every week.